Good morning, good afternoon, and welcome again to the latest ADM Agriculture grain market update. Well, after all of the bullish excitement of the previous week, the US wheat market fell off a bit of a cliff last week with DEC 21 Chicago finishing down 45 cents a bushel. Well, that's, I guess, circa £12 a tonne. And we think this setback is in part a result of the firmer US dollar. Also, partly to do with the weaker corn and soybean prices, as we saw some profit taking come into the market. That old adage of buy the rumor, sell the fact. That said, though, it's difficult to escape the fact that the USDA removes circa 17 million tons from the crop production of the world's largest wheat exporters, and also slashed 10 million tons off the US corn crop. And the weather events that crippled the Canadian crops have continued, and we now have many of the locals calling for a crop figure that is below the 24 million tons forecast by the USDA 2 weeks ago. In short, the fundamentals in the macro S&Ds really haven't changed. Outside North America, there are also weather issues continuing to create problems. Indeed, in Argentina, the latest crop ratings fell sharply on continued dryness. And on this side of the Atlantic, we're continuing to see wet weather hindering harvest progress and impacting on milling wheat qualities. DEC 21 Matif wheat fell €9 on the week. But what's interesting is the spread between CEP and DEC. And you can see on this chart here that we saw a sharp rally in the September contract as Future Short desperately tried to find milling wheat ahead of the contract's expiry. The situation in France is definitely a sorry picture, with huge areas of the country that would normally be relied on to deliver milling wheat struggling to hit even the min 72 required for feed. And as a result, we've even seen the Algerians reduce their minimum test weight requirement from 78 to 76, albeit with some significant penalties. In the UK market, we're still struggling with slow harvest, and also logistics remain a significant problem. There's some significant variability in quality, and certainly we're seeing some regional differences, with wheat sub M4, particularly in the southeast corner, having some problems with both specific weights and protein on the milling wheats. Further north, I'd say things are generally better than in the south and southeast, but we had another wet, relatively humid weekend, so I'm becoming a little bit fearful about Hagberg falling numbers. We'll certainly learn an awful lot more in the next week or so. London wheat, well, actually, London wheat held up pretty well last week, just down £2, and we've got to a reasonably aggressive discount to Matif now. I guess the talk of more feed wheat in the UK and the combined with the weaker pound and the firm Matif saw the UK become an exporter for the first time in a while. There was a chunk of business done to North Spain, Portugal last week, as other origins are yet to really finalise what they've got to sell. So the forecast as we go forward, well, hopefully we can start getting harvest wrapped up over the next 10 days. Certainly today it's mixed, but better for the next week. So our growers will hopefully get some significant headway without too many rain delays. That's all for this week's report. I hope you found it interesting and informative. If you've got any other questions or queries, please don't hesitate to reach out to your ADM Agriculture farm buyer, or alternatively directly to us using the contact details at the end of the video. Thanks again for watching.